Hello everyone and welcome to today's More Reports on Monday the 23rd of May with me, Rich Perry, market analyst at Handset Markets. We've got a fairly sort of mixed, cautious open to trading really today. Nothing too significant in terms of trending either way. You had a fairly weak open, but that's sort of unwound on the European markets. And you've got a pretty mixed outlook across the forex majors as well. Sort of the dollar is basically flat, isn't it, on the day? Because basically you've got it's performing slightly positively against the euro, dragging euro dollar lower, but there again against the yen, it's weaker. Against sterling, it's weaker, and it's sort of mixed outlook across the commodity pairs as well. So it's not really sort of showing any real direction. The yen strength has come this morning on the back of stronger than expected stronger than expected Japanese trade balance, and also sort of news coming out of the G7 over the weekend that the US is unhappy with sort of Japanese intervention in the market as well. So that sort of has helped to strengthen the yen. But it's interesting because you've seen these sort of recoveries. I mean, on the for the U.S. Treasury yields in the wake of the Fed minutes on Wednesday, we had a really strong run higher, but then started to settle down on both the 2-year and the 10-year. And it's sort of, is that just again running out of steam? But I mean, you would argue that all the Fed members that are coming out with speeches in the last sort of few weeks, pretty much to a man or woman, have actually been hawkish and talking about sort of June, July as the likely time, seemingly as though they're sort of preparing the markets for that event. Although it's obviously not guaranteed, and data dependency is still key. However, it seems as though that the traction in that move has just started to lose a bit of steam, and that's sort of seeing this dollar just run out a little bit, isn't it? I mean, that resistance of that level around 95.20 is still trading around that, aren't you? Which is a pivot level on this trade weighted dollar index. So we're seeing markets pretty much consolidating, really, nothing too much in terms of direction. And it'll be interesting to see how that develops today, because there's not a great deal of data out today. You've got the US flash PMIs, we've had the flash PMIs through the Eurozone this morning. I'll just show you how they came through. They came pretty positively, actually. If it actually works. Yeah, they came out fairly positively. Although when you actually saw the composite numbers, they actually missed slightly. But the German and the French data was positive. But the Eurozone composite data is not it's not sort of as strong as the German and French data, but still you'd argue that these trends in the PMIs are still pretty positive, I think, today, and we're still looking out for the US flash PMIs at 245 this afternoon. So it's expected to come in at 51, which is basically in line with where it was last month, 50.8. And we've also got another Fed speaker today, James Bullard, who will be. Bullard's been a funny one, actually. He sort of does flit around a little bit, although he has sort of tended towards being more hawkish in recent speeches. So it'll be interesting to see what comes out there. But I would expect another Fed speaker just to pretty much sort of set the market up for June, July again. So that takes me to my chart today, and as I said, the Japanese yen has strengthened, and that has pulled euro yen lower. And I was talking about euro yen in my chart today because I was seeing all these downtrends that we've got on euro yen. You were starting to see a possible trend break on that downtrend on euro yen on Friday, but it sort of closed back within the trend, and again today it's pretty sharply lower on euro yen, about 0.6% lower, which is about 60 ticks on this chart, and it's still in this consolidation pattern, you would argue. In the last sort of 2 weeks or 10 days or so, it's basically been going sideways, and the momentum indicators have been reflecting that. But the stochastics have been sort of more positive, not really reflected in the RSI breaking up, because the RSI moving above 50 would have been that more positive move as well. But you're still in this consolidation, really. I think whilst you trade above 122.60, I think you're still going to hold on to this sort of consolidation move. And the question is whether this is actually going to be the start of a basing pattern, really, because I look at this and you sort of look in the last sort of 3 months or so. 122 figure seems to be time and time again coming in as a floor or an area of which the buyers sort of start to look at being an opportunity to support again. And not only that, you've got these momentum indicators which are creeping higher on the MACD lines and the RSI as well. So you wouldn't really say that the downside momentum is excessively strong anymore. And it could just be that this is a near-term consolidation before the next leg lower. But I think 122 figure is a key floor area. So you're not a million miles off that. I mean, 22.60, I think if you lost that as a support, then that would again obviously put pressure on that 22 floor. But I think that at the moment, we're going to be needing to watch out for that 22.60 level, because that is your near-term consolidation area. So you can see here on the hourly chart, it's more of a gauge of how important that level is. Sort of 22.57, and you're back, interestingly enough, as we speak, back on the RSI on the hourly chart to sort of around about that 30 mark, which is where that 22.60 mark was found a support before. It seems to be that on the hourly chart, this is where the support starts to come in. So that is where you'd expect, if you're going to see the support coming in, it'll be around about this sort of level. So it'll be very interesting to see if that does start to find a new floor again, a new low. So the pressure is on the downside at the moment, but you're sort of back to levels on that hourly chart of which you'd start to think that the support might start to come in if this is going to continue to be this sort of consolidation pattern as we see. So it's quite an interesting time, I think, on Euro Yen, and certainly with the downtrend still intact, following on from despite Friday's sort of attempted move higher, it never saw the close. Sort of the closing break, and has subsequently fallen away today. So it'd be very interesting to see this one develop, because a Euro Yen falling away is not really all that positive for market sentiment generally. So I wish you good luck in your trading today on Euro Yen, and I'll speak to you later. Thank you.